The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, we go into the breach, dear friends. As always, we like to come to you at this time, which is always around this time.
The following takes place between 2 p.m. and 3 p.m.
Man, they are active in the engineering room today. Anyway, what else do we have going on? I don't think that there's anything new to really bring up. In fact, normally, I'll talk about the market and then leave, what I actually trade to the subscribers to my newsletter. But I don't think it's a big surprise, at least to me. Been looking at the options again today, and yesterday we showed just the Januaries. And like I said, someone asked me, they were looking maybe, 40 points lower down in February. So there's not any, we're getting to the edge of the earth out here. I'm showing the chart now I was showing the chart. For some reason now this thing has gone away. Come on. I'm not exactly sure what's going on with Hotcom lately these days. Let's get back to that, though. Okay, so we're back on, hopefully in the den and on Tiger TV. But it is, a fairly fixed market. Normally you want to put, a few points to the upside on these markets because they are, especially options. When we look at the options curve out here, they are for insurance for many players out there. So they're hoping those things do not get hit. But it's a pretty good indication, at least, of what market makers are intending to do. Because if they think that it's just like a football game, and you've got your bookie, he just wants to balance out both sides of the play and try to keep the spread when he can, and keep that 100%. When no team makes the spread. That's kind of a similar thing going on in options. They tend to be the best of the bunch, and why great sports bettors tend to go to work for these big gambling outfits to set the spreads. It's kind of the same thing. If you're the cream of the crop on Wall Street and really understand how markets work and are pretty good at calling them, you get kind of pushed over into the options market. It's a huge moneymaker for them. That and the other side of it's M&A or IPOs. Those tend to be where the people make the most money on Wall Street and tend to be the sharpest. The cream does tend to rise to the top. There's just not a lot going on this week. Next week, the interesting thing I saw was that they are warming up more IPOs, maybe $1 billion. That's probably a pretty another good indication that they think that the market's going to hold up at least through next week. And there's a lot of earnings next week. So we will see. Maybe they're just teeing them all up. And if earnings are good, they'll push them out. And if not, they'll delay them. But some fairly large IPOs look like they're teed up from next week. Only one, I think, this week, and it's kind of small. So it's more about options expiration this week, more about earnings, and maybe those IPOs. But it looks, normally if they set an IPO, they think that there's a good chance of going out. So again, we're kind of in this market. We talked about it, in August last year. We had a lot of discussions about doldrums, what they meant, the nautical sense, and the markets too. A lot of indecision in the market, and a lot of people don't want to sell. A lot of people don't want to buy, and right now we are having that three-way standoff in the final scene of the good and the bad and the ugly, right? So we'll sit here and watch. But again, I haven't changed my view since January 3rd, and that is I'm going after individual companies. I bought another equity today that's not in my traditional bailiwick, and so a little bit on the outside of that. As we said, we're going to watch options this week. If they think something's happening, it'll show up generally in the options first. But we'll see. I just don't see anything changing through this Friday. So maybe individual options are the path to making money on individual equities or in even more narrow sectors, which is what I'm doing. So what else do we have going on out here? Well, we'd like to start this show with a little bit of history, so we're going to do that.
That it's all just a little bit of history repeating.
It is history repeating. Today in 1956, after more than a half a century as a private company, the Ford Motor Company goes public when the Ford Foundation sells 10.2 million shares at $64.50, the largest IPO then on record. The offering puts 22% of Henry Ford's company into public hands. So some of these, now, even probably in the last 10, 15, I'm going to even say last 3 years, but the previous 13, so maybe into 2013, the thing was to actually push out your IPO. Laws have kind of changed, and now these IPOs are gotten so large that it's a lot more like Henry Ford going public with a Ford Motor than it is the traditional days of Intel or Microsoft going public back in the 80s. Even though they were larger companies, they still had a lot of growth ahead of them. 1956, Ford still had growth, but you got to say that it was no spring chicken anymore, and that tends to be the larger IPOs and the companies with the biggest growth seem to have already gone through it now with companies that we've seen out there lately offering IPOs, especially they call them unicorns in the Silicon Valley, and that is stocks that are already with $1 billion, companies already worth $1 billion just on private equity, much less going out to the public. As we start the show today, as we said, not much going on. We're up not even half a point on the S&P cash, 2268. I've got a couple in the daily newsletter, got a couple of long positions. Now I have kind of two positions in the Tech Insider, and we'll see how those work out. One's doing pretty good, but they're going to be slow movers. One of the things that we talk about occasionally are my models of the market, and going back to some of the earliest work that I saw, at least academically, showed that of a stock movement of an individual stock, not one in an ETF or something like that, but an individual ETF, 50% of its movement is normally put back on the market. So we're not going to have probably the huge moves in even equities. But if you're trying to make money, I think that's kind of where we have to be until we bust out of these doldrums. And right now I'm looking into next week thinking that we could still be going flat or sideways in the big index.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Let's think if there's anything else really to talk about. Not really. Of course, we had Delta Airlines before the bell and United Health Group, AMD after the bell tonight. Before the bell tomorrow, or no, that's Citigroup this morning, Goldman Sachs, Netflix, and Xilinx. Alaska Air, BB&T, BH Hunt, and Walgreens Western Alliance out this week. So there's not much there. I got a lot of charts that I wanted to go through today, so we'll start looking at some of those. Going into 52-week lows, Vista Outdoor, VSTO, this one another tick down after falling apart. Probably going to find some kind of support level in here somewhere. Looks like the volume's starting to at least slowly come out. Fitbit, this looks like these companies are getting ready to take the big dirt nap. Continues lower. Volume a little higher than the last low out here. This thing's probably going to go to $5, I suspect. Volume off the 840 high that we had. What's date was that? January 4th has been pretty good. So that's it. What else do we have? Himax. This thing continues to auger down. Maybe they get a new contract from somebody. They make chips to control LCD screens like your smartphone. Just looks like they're vastly out of favor. Another day down for Macy's. I don't see anything curing this. They have broken through that $30.41 low with some gusto. $10, what's that? 10.8 million shares on August 3rd. So we continue to see that. MACK, which is Merrimack Pharmaceuticals, again on the list of 52-week lows. And Myrid Genetics just keeps kind of ticking down. This one may be very interesting because it's not got the volume to bust out the lows. It still had too much volume, though, coming off this last $18.02 high. So this thing's probably going to go sideways for some time. But keep an eye on it. May come out here. Pearson PSO down hard from about just a little less than $10 to $7.05 today. VF Corporation. Now, this one's down against its previous low. Volume's 3.36 million shares today compared to the October 25th low at 51.38 with 4.9 million shares. But looks to me like it's going to come in. Energy off the top, too much for me. VSTO, which we already talked about. So let's get to some of these other ones, 52-week highs out here. Interesting to watch Alcoa. There's a couple on this list that I think are starting to tell us some fun out here, and that is Alcoa made its way back up here to this 52-week high. It's got some juice today, 4.6 million shares already compared to the 3 million shares that we saw at 34.30. That's back on April 29th, but this thing needs to hold 34.30. It's got some decent volume today, so it doesn't look all that bad. We'll keep an eye on it. AAOI, Applied Optoelectronics. This thing finally had its day in the sun. Broke out and with a sign of strength, and that goes back to the 12th of this month. 4.4 million shares compared to just less than 400,000 shares on November 21st. So you had your sign of strength. You had huge volume. It's kind of going up here. You'd like this thing to get back down in about mid-27s to buy it if you're lucky to do so. But again, another 52-week high on that one. You want to look at it pulling back. Apple on the 52-week high list. When we came back from vacation, I said that I thought I'd kind of turned a little bullish on Apple, thinking that it was going to go back up to 130. There were many rumors about some of the new technology that they're going to have in the next iPhone. I suspect that those rumors, from what I've seen, are true. And why I don't think that the companies providing that are going to be that exciting earnings opportunities. I do think Apple could hold up the NASDAQ by itself as we go through the next iPhone release, which is April-May timeframe. Applied Materials, the big powerhouse, just continues to finish an ABC on the way up at $34 today. No real signals of that coming off, although we'll look at the semiconductors today because it looked like maybe those things have gotten way ahead of themselves. Array Biopharma up to $11.65 today. This thing's done nothing but go up from $3.10, which is the August 25th low. Did not see anything in there that said this thing was going to launch. ASML caught a lot of people sleeping on the short side. This thing didn't really have a lot of juice as it broke through previous highs around the 110, 111 area, but kind of did it on earnings today. Looked like everybody was pretty much right on the idea that this thing was breaking out of its long-term uptrend. And again, this thing could come back down to 115 on light volume. Be taking a look at it. BHP Pilton, just a little tick above its 52-week high. Its brother BHP, pretty much the same chart. But not a lot of volume on these last couple of days as these things have been coming out here. Bridgepoint Education, nice big candle, 1 million shares compared to the 202,000 shares back on May 15th at $10.93. So you've broken that. Another sign of strength. We're seeing a few of these companies start to break out with signs of strength. One of the ones that I think is more important on an industrial level, and I was watching this over the last few days, is Fastenal. If you're unfamiliar with these folks, they make nuts and bolts. Well, they actually sell them too. But when industry starts getting fired up, they need nuts and bolts, and they call them a fastener company. But think nuts and bolts, wing nuts, stuff like that. Good sign of strength. So finally, we're seeing some of these companies that, as I've said, we haven't seen a lot. We're starting to see some of these kind of sneak to the upside. March 21st, $48.92, 2.5 million shares. We got 6.6 million shares already today. This thing looks like it's going to hold the high. Nice sign of strength out here. Again, you want to probably come back down to about $48.50 on light volume on the pullback to see if you couldn't pick that up for another move. But a valid breakout, several out here. Lam Research, just another 52-week high. No real specific signal out here. Northern Dynasty Minerals, this thing just ticked up a little bit there, a penny stock. Rio Tinto, I was kind of interested in this one because it was going against this previous high, kind of played around with it in the last 3 days. You needed 9.4 million shares. On this one, you only have 3.3 million shares so far. You did get 5 million shares the other day, but still nowhere close to that December 8th high with 9 million shares. So keep an eye on it. Another sign that I think maybe something, at least industrial, is starting in the markets. That is Scorpio bulk shippers. I've been looking at this sector thinking it was going to take off for a while, ever since the Baltic Dry Index started coming higher. And guess what? There really wasn't a big sign of strength or any kind of life. We finally have one of these bulk shippers that's really made a fairly good signal, and that is Scorpio Bulkers Incorporated, SALT. We'll talk more about this, but volume seems okay. Probably needs a little more, but we'll get back to this on the other side of the commercial.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hang on just a second. We got some breaking news here. MNK. Hopefully we got it here. MNK. Apparently these guys are breaking the law out there, and somebody is filing some charges. So yeah, we'll do it. MNK, this thing's tanked here just in the last few minutes, blowing through some previous lows, and it's got lots of volume. Let's take a little bit longer look at this. We don't see much. This thing had a lot of support, but it's blowing through, already kind of gone through that already. But certainly today it's got all the volume. 18 million shares is the highest volume I see back here on March 16th of 2016. So 18 million shares. We'll have to see how volume picks up before the end of the day on that one. We were talking about salt when we left. Again, let's go back to a shorter one out here. Was thinking that eventually these bulk shippers were really going to have to get moving if we were looking for some kind of confirmation that everybody's buying iron ore and copper and everything else. This is a real, you had to move up just coming up off the floor in some of these. But this is kind of the first one. I'm going to be looking at the sector a little bit more out here. But this may be finally the conversion that says, that not only people are buying stuff, but they're buying enough stuff to actually maybe make some profits out of all these companies going out of business in the bulk shippers. So we'll look at that. Schlumberger up again, 52-week high, but not really making any kind of volume out here that would make me think something's going on. In the lithium battery business, SQM is the chemical and mining company of Chile that supplies, I don't know, probably 75 or 80% of the lithium that we get here in the U.S., whether it goes to Japan first or China, and then comes back in the form of lithium-ion batteries. This one's up here testing it with just about the same volume out here, so not a real ringing source of a breakout. I have noticed that there's a lot of discussion about Tesla starting their own mines out there in the West, afraid that being stuck with SQM as a single source, or maybe the Russians, probably not a wise idea. I don't know how viable that is, but I know that they are working on creating their own mines. Again, almost all these rare earth minerals are not rare. They're just not in high concentrations, and apparently there's a couple of mines that Tesla wants to set up for their own battery factory that are only a couple hundred miles away from that Las Vegas location. Vail, of course, another one out here. This one's got a nice move. I would have liked to see a little bit more volume. We'll see how this one closes out. Today we've got 33.8 million shares so far, which is not bad. You basically have the same volume as the December 8th high going back into that. So we will take a look at it. If you have any questions, you can give me a call at 877-927-6648. And email me at path@tfnn.com. And question about what I see at all, if anything, in AMPE. And thanks for the kind words, Larry. Larry does not say where he's from, so he's from Lutz, Florida, in my opinion. We will teach these people to tell me where they're from. To Ampio Pharmaceuticals, I don't know a whole lot about it. It's a penny stock bio company. It's kind of going sideways out here, which is not bad. I don't see anything out here other than a light volume today. I'd have to know more about this company and how much money they have. I do like the sign of strength on the 6th of December that this thing had, and kind of where you would like it to come back. You kind of come back probably as close as you can. I'd like to buy this thing at 90 cents or better if I was doing that. So not a bad signal, but maybe 85 to 90 cents is a better signal out here. Would like to see the volume continue being light. But yeah, nice breakout to 114. Yeah, I don't know enough about this company to tell you anymore. Western Digital, another high out here. They went and, or at least in talks, or maybe they bought it. I haven't been able to get to the bottom of it yet today. I'll look at it more tonight. Talking about buying at least some assets from Toshiba and getting into the SSD market a little bit more. The only question I have is that their traditional margins have been rather large compared to what they should be getting in SSDs. Can they continue to do that? I think at some point, again, Western Digital is going to be a very good short. We're just going to probably, again, I think I said maybe mid the second quarter or maybe even midsummer. I think this thing is probably going to get about as good as it can. But it looks to me like this is really turning in a commodity business. And I think there are several people that will be releasing products that will absolutely destroy this existing business in Western Digital, Seagate, and Toshiba's already having a hard problem already. So those are the 52-week highs. We're going to look at some of the bigger movers out here, and that is the did we already look at them? Percent advancers. Did we do that? No, we didn't. We'll go ahead and that. We looked at Alcoa already. ASML was already on some of our other scans. Therapeutics, no big deal. Jazz Pharmaceuticals, this went right back up to its previous 130 high. This $130 high takes you back to September 22nd with 630,000 shares. Hit it with 2.45 million shares. Did a Punxsutawney Phil and pulled back into the trading range. Lots of volume out here, but again, not holding the high. So you got a little bit of both. We looked at Vail already. So let's look at United States Steel. This is another one. Could it be starting an ABC on the way back, as one of our gentle listeners have been talking about it. So let's see if this thing was an ABC out here, what we would be looking at in this. So that takes us to this low out here, which would be our A point. And our B point would be, this would be a big ABC if it is one. If we look at yesterday's low at being the C point, that sets up a rather large ABC. Did a 33% retrace. I don't know if you could make a case that this is some monster ABC to take you to 54 bucks, 53.51 on a 1-to-1. My guess is, if it is, we're probably going to go sideways for a while. It probably needs to digest this move. You may get one more test of 31.80 on lighter volume. It may even pierce that. But you know, you've got a low out here where this thing had a big day on the 22nd of November. I would kind of like this thing to come back in that just a little bit more to get my risk reward correct on this. So maybe $29 on U.S. Steel if you get lucky. Take a look at it there. But might just run from here. But to get it right, would want it to pull back just a little bit more. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Sorry, I have to type something and get my pithy thought out while I'm thinking about it, or it will be gone, like yesterday's newspaper. I'll take a look at it here, see if I'm shocked. I keep on thinking the longer I look at the S&P, the more I'll be happy when it actually moves somewhere. It does not and has not. 2268, which basically up half a point on the S&P. Cash volume is 2.2 billion shares on the New York Consolidated Tape. So I don't know if we can make anything more about it other than that. Let's get back into some other things. You know, like I said, some of these individual stocks are moving, but man, we are stuck in glue for the broad indexes. And of course, with broad indexes being about half of the movement of most of the underlying stocks, means that we're probably looking at slower movements in stocks until we get out of these doldrums. And a few more surprises. United States Steel, we were talking about that. Yeah, I would have liked to see a little more volume today. That's what I'm thinking. I still think that you want a little bit more pullback than 33% to get the risk reward right. I think that just under 30 to 29 bucks area where this thing went up on the 22nd looks to me like certainly a possible YY, which is I'm pretty sure this is a Russian company. Let's find out about this one here. Up through volume, not holding it. I think this is kind of like one of their. Do they have anything on this one? Doesn't even have anything on it. I don't know why it doesn't. No, nothing on this one. I think it's a Russian company. Broke with volume today, went up, tagged its gap down that had fairly significant volume back on the 28th of November of 2.1 million shares with a 1.22 million shares today so far, and kind of gave it up. So again, are all the stocks busting up or busting down? There aren't. There are a handful on either side. So I'm not, I think until we start getting everybody on one side, either a lot of stocks busting highs with some volume or a lot of stocks busting low on volumes, we're going to be kind of trapped in this area. And wouldn't be surprised to see if they can hold this up through Friday, that they'll hold it up next week to push out another $1 billion plus worth of IPOs if they can keep the news feed going. That was a percent advancers. Let's take a look at decliners out here. BGFV, it's BGFV, if we've got that. Big Five Sporting Let's turn that off so we can clean this up a little bit. This certainly looks like it's going back to its gap at 14 bucks. CCJ, which was the darling of the den here not too long ago, gave it up hugely. I had some charts, I think Friday in the newsletter that showed a lot of these things in this sector were really getting signals of very light retests, and not really too shocked that this thing came back down. But again, nice to the upside. What you dislike is all the downside at one time on this one. This would suggest that you're not going to have some kind of V bottom in this, but maybe if it goes sideways long enough, you can base out right around that $10 level. Might be rather interesting out here. Nice move back up. Again, if you're going to have a bull market, something like uranium, you got to advertise it. This may be the first sign. Now you want confirmation with this thing going sideways for a while, and maybe look at some of the other stocks like the dollar penny stocks or some of the ETFs in this uranium. Again, the news was just so good with the Iranians buying so much uranium at once, and you kind of want to be ready to sell the news. Dynegy, another energy company out here filling its gap with light volume. This is another trend that I'm starting to see some of these energy companies really come back and fill these big gaps. On the Dynegy, this was the gap down from November 2nd with 27 million shares. It did okay, 27 million shares. But yesterday up with 5 million shares, not going to really do it. This thing's a gap of Palooza right around this $10, $11. What do we got? 1, 2, 3, 4, 5 gaps. So when you go back and look at this one on a longer time frame, in fact, let's go back a little longer. These gaps are all over this $10 price range, and they go back to February 29th of last year. And what's this gap up here with nice volume? 5.4 million shares on March 3rd. So just know that you're kind of up against the wall with the Dynegy in those areas. This company basically came out and said that they were not smiling about their earnings, and man, were they ready to punish this stock. They hammered it and hammered it and hammered it this morning. It is not quite down to the level of support that would come in from that May 19th low of 2016 at 28.43. But well, you only got a couple more bucks to go. I suspect that you're going to get into that area. It's already kind of acting as support from the April 29th, 2016 high down to that May 19th low. If you were to break that, you're back down into the 21s. And change. So keep an eye on that for Gigamon. NTRS, this one gave it up. Again, let's see on my overlays here. This is kind of one of these ones where you want to watch closes under like a 9-day moving average or a 3x3 displaced closing average. I saw this one too late yesterday, but down, volume picked up. You're going sideways. We were talking about how sideways patterns are a pattern. In fact, I think, was it yesterday? Yeah, it was yesterday. One of my subscribers asked me about what these patterns going sideways mean. Generally, at tops, they mean distribution, and at bottoms, they mean accumulation. So we have probably a pretty good example and confirmation over the last 2 days that Northern Trust had a lot of distribution. And if you want to know what distribution looks like, take a look at this. NTRS is the symbol. Were you playing at home? Stock that's been very shorted. Everybody thought the end was nigh on this one. Actually, not a bad setup right now, or getting close to a setup. I just hate the retail sector. But Pier 1 imports caught a lot of people sleeping, and a lot of shorts in the stock, and it took off with like a rocket. It is, at least the chart's looking okay. Still think retail is kind of a tough market, tough sector, but took off like a rocket on the 15th of December on earnings, got all the shorts asleep. I kind of think that this may be what the S&P is going to look like when we finally break out of these areas, that's kind of a nice little pop to the upside. And then a nice pullback. Now that pullback in the S&P and the rest of these indexes will tell us whether that's a blow off top or what, or maybe a buying opportunity. PIR, nice Wyckoff looking pattern out here. We'll be back after this.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I had a question. There's always new listeners to TFNN. And one of the original patterns for technical analysis, I've always heard it called the Wyckoff pattern, because why? I don't think he invented it. Somebody came in, he ran a kind of like a Wall Street Journal newspaper in the early 1900s, like 1905 to 1935 or something like that. Can't remember. He died, I think, somewhere in the 30s. But everybody and their dog he was buddies with. He ran the big, he had a stock newsletter, but also it kind of a regular Wall Street Journal kind of thing too. But kind of the big newsletter writer and publisher for news on Wall Street. But a lot of people would come into his office and tell him how he traded. One guy came in and never was real clear who told him this theory, but it's kind of stuck around, and certainly found the test of time. And I just call it the Wyckoff pattern, is probably the best known way out there. And that is wait for a stock to have a huge sign of strength, a nice gap up, lots of volume. It goes a little higher. And then hopefully, if everything works right, it comes back down on lighter volume. You get back somewhere into the gap that was formed. And normally I like about halfway through. That may be kind of market specific. But then you start picking your battle somewhere in that gap as long as light volume comes in. So if you're looking at pure one imports, that is kind of the archetype. The chart would be good. The sector pretty horrible. And, even a good chart pattern can be negated by a horrible sector. It's hard for me to see that this doesn't get sold. And this, if we were living even 15 years ago without an ETF for literally everything, then, this one certainly it's birds of a feather and maybe just too many. I don't know what ETFs this is in, but again, that is the big problem in today's world. And that is if you're in a really horrible sector, doesn't matter how good the stock is, if everybody's selling that sector ETF against you. Just an idea out here. When we talk about horrible retail numbers, again, Target came out with its Christmas numbers. No real surprise. I went into the place a couple times during Christmas. The chart is not as horrible as a lot of people would say. At least the energy on the way back till today was not all that bad. We haven't tested the low, which is $65.45. And that's the November 9th low. But, what else can you say about it? We're about $1 away. You've got plenty of volume. My guess is that will get tested at $65. Is Target going away? No. Is it still one of the better retailers? It is. Eventually, someone's going to figure out how to compete with Amazon. And, maybe Walmart's been taking a little thunder from Target. Those two are always fighting against each other. But just, again, in a sector, doesn't matter how good looking the chart is. Even this one had kind of a nice sign of strength, but it came back down and negated all of it on the 22nd of December when they first kind of came out with soft numbers. They're following up today. So that's kind of about it for today. Again, not expecting a lot of movement, maybe even into next week now. But we are, at least in the newsletters, going after individual stocks that are maybe not so swayed as retail. In the meantime, sell when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time. Hang on for Tom O'Brien in the next 2 hours as he calls earnings. We do have the kind of the warm-up, kind of the first couple of innings of the game. We get into the big heart of the game next week.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.